Hello everyone. In this session, we'll discuss in detail how to prepare a balance sheet. So I request everyone to keep ready your papers and a pen. So now let's get started. Before we learn with how to prepare a balance sheet, two terms we have to be familiar with is about grouping and marshalling. Usually, grouping and marshalling means the arrangement of assets and liabilities in a certain groups and in a particular order. This is what grouping and marshalling is about. Grouping means assets and liabilities are grouped together. For example, we can say that under assets it is grouped as current assets, then investment, then kinds of fixed assets. Under liabilities it is grouped as current liabilities, then types of fixed liabilities. This is what grouping is about. Then marshalling comes to how we choose the order. Sometimes the order might be in the terms of liquidity, or sometimes it might be in the terms of performance. So let's discuss that in detail. The assets and liabilities are arranged in two ways. The first is in the order of liquidity and the second is in the order of performance. So once we are preparing the balance sheet in the order of liquidity, which means that if we are preparing a balance sheet in the order of liquidity, the assets and liabilities which are easily converted into cash are marked first. Then comes the assets and liabilities which cannot be easily converted into cash. Putting it with an example, if we are taking the asset side, the assets which can be easily converted into cash are current assets. So current assets will come first. Then we can easily convert into cash as the investment. Then at last, which cannot be converted into cash easily, are the fixed assets. So this is how in the case of order of liquidity in the asset side will be prepared. In the liability side, first it will be current liabilities, then comes the fixed liabilities. So this is what in the case of order of liquidity is about. Now coming to the order of preference. In the order of preference, it is just the opposite, which means that assets and liabilities which cannot be converted into cash easily are written first, and then the assets and liabilities which can be easily converted into cash are written at the last. So in the case of asset side, we'll start with the fixed assets, then investment, then current assets will come. And in the case of liabilities, first the fixed liabilities will come, then the current liabilities will come. So this is how you prepare a balance sheet in the order of liquidity and in the order of preference. Now moving on to the principles of balance sheet. The principles of balance sheet, there are two principles of balance sheet. The first principle is that grouping, and second principle is that marshalling. Grouping in the sense that, first let's take an example of current asset. Current asset, under the current asset you will have cash in hand, cash at bank, sundry debtors, all this will be there. So first all this will be grouped together. Then investment will come, investment by X, investment by Y, investment by Z. Then those will be grouped together. Then coming to fixed asset. Then fixed asset is we have goodwills, patents, copyrights, trademarks. All those will be grouped together. This is how you group it. And then coming to the second principle, that is marshalling. Marshalling is that which order you preference, whether the order of liquidity or whether the order of performance. So first if you're preferring the order of liquidity, then first the current asset, then the investment, then fixed asset will come. If you are preferring the order of performance, you will have first the fixed asset, then the investment, then comes the current asset. So this is how the two principles are about. First is the grouping, then second comes the marshalling. Now let's take a deep look into what a balance sheet is or how a balance sheet is prepared in the order of liquidity. So this is how a balance sheet you have to prepare it. First, the thing you have to keep in mind is that first draw a table like this. The thing is that the table should have 5 columns, 1, 2, 3, 4, 5. On your left hand side you will have your liabilities, and you should have 2 amount columns, and on your right hand side you will have your asset and only 1 amount column. Do mark all the headings, put it in the proper table. Okay, then the thing is that before starting or before entering the entries in the balance sheet, you have to give the heading. The heading of this is the balance sheet of the name of the company. Suppose you can say AB company. As on, the date will be given in the question. So if the date is this 31st March 2020, this you have to write it. So this heading is also necessary. So this is how you have to first draw the table and give the heading. Then the thing is that if it is on the liquidity basis, you can start with the current assets. What comes under current assets are cash in hand, cash at bank, bills receivable, sundry debtors, prepaid expenses, acquired income, closing stock. These are the things that will come under current assets. This order you have to by heart it. Then comes the investment. Investment have to be marked. If there are investment by X, Y, then you have to mark it. You have to write it. Then after investment, it comes the fixed assets. So first, if it is in the case of liquidity, first current asset, then investment, then fixed asset. Under fixed asset, motor vehicle, patents, furniture, then plant and machinery, land and building, goodwill. This is the order you have to write in the asset side. Now coming to the liability side. On the liability side, you have to start with the current liability. Under current liability, you have bank overdraft, bills payable, outstanding expenses, salary creditors, then income received in advance. All these entries, if the amounts are given, for example 10,000, 20,000, 30,000, whatever amount has been made, this amount entry have to be made in the second amount column, not the first amount column. This first amount column will be used only for the fixed liability purposes that I will explain to you. All the other expenses entry have to be made in the second amount column. Then after current liabilities, what you will have is the long-term liabilities. The long-term liabilities includes loans from bank, debentures. That amount also you have to enter in the second amount column. Then the last which you have to enter the liability side is the fixed liability. So fixed liability includes the capital. This capital, you have to write capital over there. Then you have to mention the opening balance amount. That amount you have to enter in the first amount column. Then if it is profit, you have to add profit. That amount also you have to write it in the first amount column. You have to add it. If it is a loss, you have to minus it. Then that amount you have to write it in the first amount column itself. Then if there is any drawings means withdrawals, that you have to minus it. So you will be minusing that amount from that opening balance. Then you will get an amount that is mentioned in the second amount column. And at the last, what you have to do is that this asset amount and the liability amount should be equal, and also both of them should come on the same line. If you have space over there, just leave those spaces. The last amount, this amount and this amount should come on the same line. So this is how you generally prepare a balance sheet, and this is in the order of liquidity. Now moving on to the order of performance. This is how you prepare a balance sheet in the order of performance. On the asset side, you can see that first we will be starting with fixed asset, just the opposite of the previous one. In that we had fixed assets at the last, isn't it? Here the fixed assets will come first, goodwill was at the last, goodwill will come first. So just the opposite, just the ulta situation you have to take into consideration. So first the fixed assets, then the investment, then comes the current assets. Here also only one amount column for assets. Then coming to the liability side, first the fixed liability. Under fixed liability, what you have is the capital first. Give the heading capital. Then you have to first write the opening balance amount. Opening balance amount have to be written in the first amount column. It is this. Then if you have net profit, add net profit. Else if there is loss, minus the loss. Then if you have any drawings, again minus the drawings. That amount you have to write it over here. Then comes the, after fixed liabilities, then we have long term liabilities, that is loans from bank. Then after long term liabilities you have current liabilities, just the opposite of the previous one. So under the order of performance, just do it the opposite way. As shown before or learned before, this amount and this the amount should be equal and should come on the same line. Hope it is clear to you. Here also you have to give the heading before preparing the balance sheet of the name of the company, say AB, then the date. So this is how you prepare the balance sheet. So now let's discuss a question. This is how you will be getting a question. All the things will be given like this. Here the thing is that here the name of the person or the company is given, then the date is also given. In the order of liquidity and the order of performance also you have to prepare it. All the items are given together. So while studying for balance sheet, what I prefer is that what all comes under asset, what all comes under liability, in what order, by heart it, just by heart it. So once you're preparing a balance sheet, you can just enter the amount. So this is how you will be getting it. And once you get the question, just classify it. If plant and machinery comes under asset, write asset over there. If prepaid expenses is an asset, write asset over there. Income received in advance, that is also an asset, write asset over there. Bills payable is a credit, liability, so write liabilities over there. So mark it whether it is an asset or liability, then your classification would be easy. So for that you have to by heart what all comes under asset and what all comes under liability. So go through this. Then if it is in the order of liquidity, this is how you will have to write it in the order of liquidity. First draw the table, then write the heading balance sheet of Mr. Dinesh Jose as on 31st December 2017. Give 2 amount columns for liabilities and 1 amount column for asset. In the order of liquidity, first you will start with current asset, then comes the investment, then comes the fixed asset. All these amounts are given in your question, just directly enter the amount. Then in the case of liabilities, since it is under liquidity, give the current liability, then long term liability, then coming to the fixed liability. So in the question itself you can see that what is the capital amount or opening balance amount. Here you can see the capital is given as 2 lakhs. So this is what your opening balance amount is set. Then you have drawings over here and net profit is also given. So along with capital, this net profit have to be added and drawings have to be subtracted. So this is what the entry is given over here. In the case of fixed liability, give the heading capital, then write the opening balance amount, that is 2 lakh, then add the profit over here. This entries you have to make in the first amount column, 5,000, that you have to add it. The net profit you will be adding it, and less the drawings. Less the drawings means you will be subtracting it. So 2 lakh plus 50,000 minus 10,000, you will be getting 2 lakh 40,000. That you have to make the entry in the second amount column. Only this fixed liabilities entry you will be made in the first amount column. Rest all liabilities amount you have to make the entry in the second amount column itself. Do not get confused. So once you do that, you can get the total. You have to add all this total. So you will be getting the total amount 4 lakh 5,000, that is on the asset side, and 4 lakh 5,000, that is on the liability side. So the asset and liability is equal, and that should come on the same line. Now the same is prepared on in the order of performance. Here you will start with fixed asset, then coming to investment, then coming to the current assets. These are the current assets, including closing stock. Current assets will be there. Here you will start with, in the liability side, fixed liability, that is capital amount, that is the opening balance. Add the net profit minus the drawings, that you have to mark it in the first amount column. After doing that, you have to get the total entry in the second amount column. Rest all entries you have to make in the second amount column itself. After fixed liabilities comes the long-term liabilities, then comes the current liabilities. So this is how you have to make it. Here also you will get the same, asset is equal to liabilities, and that both should come on the same line. So this is how you prepare a balance sheet in the order of performance. Now coming to the objectives of balance sheet. First, the objective is that to exhibit the true and the correct view of the state of affairs of any concern. What is the actual position is. That is what the first objective of the balance sheet is about. Then it helps us to know the assets and liabilities of the company. It helps us to understand how much assets and how much liabilities the firm has. To learn this, balance sheet is required, and this is what the main objective of balance sheet is. Then the need for balance sheet is that to know the nature and value of assets of the business. How much assets does the business have? For that, balance sheet is required. Then to know how much liabilities the firm has. For that also balance sheet is required. Then to know the position of owner's equity. Then owner's equity in the sense that what is the position of the capital of the business. So for that also the balance sheet is required. So this is what generally about balance sheet is about. Hope you all understood. The balance sheet do have some disadvantages as well. The major disadvantage of balance sheet is that It is just a snapshot of the financial position at a given point in time. Only at that particular year's financial position we'll come to know on learning or understanding the balance sheet of that firm. Then the thing is that figures in the balance sheet are actually less informative. Actually, more data are involved in the business process and all. This provides only a small report about the financial position of the company. So that is also a disadvantage. So these are the main disadvantage of the balance sheet. Hope you all understood.